Honestly, we think that investing in real estate and building a backyard house for extra rental income both make a lot of financial sense, and we stand by both and actively invest in both in our own portfolios. But if you had limited money to invest in right now and you had to pick just one, which option would be a smarter move? Watch this video and we'll break it all down for you. A backyard house will give you better rent yields, and investing in a new purchase can give you better long-term returns. So ideally, you do want to have both, but if you had to choose one at the current moment, I would have to say that the immediate concern isn't just about maximizing returns, but can also vary depending on your personal goals. For example, if your long-term goal is to expand your real estate portfolio, but your borrowing capacity is getting tighter, a backyard house could be the better first step. What happens is that you need a lot less money to build a backyard house, and you get better rent yields as well. And so what this means is that you end up strengthening your debt servicing ratios, which improves your borrowing capacity, and that is going to definitely help you qualify for bigger loans moving forward, which will then facilitate buying more properties in the long run. So in this case, the ideal roadmap might be to stagger it, to buy a house first and then build on it, and then buy after that, and then build, and so on. Now, another reason why people are choosing to build instead of buying these days is because they do want to de-risk and get stronger holding power. When you build a backyard house, it could cost around $400 per square foot to build a 1,000 square foot backyard house. And we've managed to fit a 3-bedroom unit in that space, and that could translate to $3,500 in rents per month. Now, your tenants would pay for hydro and gas, and so there would be minimal operating expenses on the backyard house. So you can budget maybe around $200 there per month for operating expenses, and that would translate to a cap rate of close to 10% and very positive cash flows, even if all of that money for the build is borrowed from pulling equity out from your home. Now let's see how it looks like if you borrow all of the money for a new purchase. In this case, the down payment would come from refinancing your home, and the balance would be from a new mortgage. And so on a $1.1 million purchase today, you might be able to get a house with 3 separate units. And in this case, the total rents here are over $6,700 per month and a very strong cap rate of over 6% as well. But because interest rates are high too, you end up getting negative cash flows here with a new purchase. But of course, the main reason people buy real estate is because you can use more borrowed money for the potential for better absolute returns. So going back to the previous example, let's assume that the appreciation is the same for the build and the new purchase at a conservative 3% per year. Let's also assume that all of the money is borrowed for simplicity. And so with the build today, you have a cap rate of close to 10%, less 6% in interest expenses, plus 3% in appreciation per year. And that makes a net annual return of 7% on our borrowed money of $400,000, which means an absolute return of $28,000 per year. Now, with a new purchase, although the rental income isn't good, you still gain an appreciation. And if we assume the same 3% in appreciation on your $1.1 million in borrowed money, although your net return on investment isn't as good at 3%, your absolute returns actually are more because you have more borrowed money. And then if we crank up the appreciation assumptions, the absolute difference would get bigger, which is why real estate investing had been so successful in the past 10 years when average annual appreciation in Toronto was over 7% per year. Now, finally, I'll try to address timing a bit since we get asked about this a lot. Now, we can't advise whether it's the best time to invest nowadays in real estate because nobody really has a crystal ball, but here are some facts. Cap rates on purchases usually move with borrowing rates, and if rates go higher, you typically see cap rates go up. And the reason for this is because the purchase price usually adjusts lower to compensate for higher rates for investing numbers to make sense. Now, the cap rates do fluctuate more on new purchases, but cap rates on builds don't actually vary as much because the cost to build just doesn't change as much. Perhaps you can think about it this way. If you had limited money and had to choose one right now, buying might be the better deal right now because purchase prices are more discounted in today's higher interest rate environment. Let's look at the last example again. The rate of return is 4% higher on a new build compared to a new purchase today. Now, if interest rates go back to more normal times, then cap rates might come down, and so the return gap actually gets bigger. And so, if you do believe that purchase prices are discounted today because of our higher rate environment compared to a normal market, then taking advantage to buy today at discounted prices first and then building later could be the wiser decision. Again, I do want to stress that neither one nor the other would be the absolute right decision for everyone because it does depend on your personal investment goals. The good news is that our team is very experienced with both, and we can walk you through the pros and cons of each for your individual situation so that you can make better decisions. Eventually, if you're looking to buy real estate in Toronto, our sales team would be happy to help you out with that. If you needed help with builds, our sister company, Urban Lanes, specializes in garden suites and laneway suite builds in Toronto, and we can walk you through how that looks like too. So just take the first step and schedule a discovery call with us by heading to this link right here. If you enjoyed this video and found it helpful, we would love your support. Give us a thumbs up and hit that subscribe button to stay tuned for more awesome content from us. Our channel is all about real estate investing in Toronto, covering everything from market trends to housing policies to interest rates and best investment strategies. We're here to make your real estate investing journey easier for you, and so our team offers services like planning, analysis, buying and selling, renovating, finding tenants, and even property management. If you want to learn more about us, just check out our website or find us on social media. Thanks so much for watching, and I'll see you in the next video. Bye.